Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Our last video was on the importance of guidance, its power, and Doximity's fourth quarter 25 as an example. In today's video, we're going to drill into those fourth quarter results to really illustrate why guidance is so powerful. And so let's start with two premises. The first one is your guidance is the long-term valuation tool of a public company. This is how you set financial expectations management, and this is how you're judged on financial expectations management. Secondly, the midpoint of your guidance relative to the midpoint of consensus is the most important data point coming from your earnings call, earnings release, and really what drives the changes in valuation. So let's really drill into the guidance that Doximity gave on its fourth quarter call. And it gave guidance on the first quarter of 26 and full year 26, which we have in this grid here. We have revenue, adjusted EBITDA. And what you can see is that for the first quarter at the midpoint, Doximity expects to do $139.5 million in revenue and $71.5 million in adjusted EBITDA versus prior consensus of $143.3 million on revenue and $74 million on revenue. For the full year, their guidance at the midpoint was $625 million in revenue, $339 million in adjusted EBITDA, and previous consensus was $635 and $341. So when we look at this, we want to figure out what is the magnitude of these changes. Are they large changes? Are they small changes? And so what you can see is that the revenue change and the adjusted EBITDA change in the first quarter was really only about a 3% change. So maybe this is a big change, maybe it's not. When we look at the full year, the change was only about 1% on both metrics. And so when we look at the two pieces of guidance in balance, it seems that maybe the first quarter is seeing a little outsized change in terms of those guidance midpoints, whereas for the full year, that change is much more muted. So maybe this is communicating two things. Number one, the reason the stock price went down 20% after hours when this guidance was issued is because the street felt that the change in the first quarter guidance, the magnitude of that change was too large. And because the stock is trading at a valuation premium and targets are at a valuation premium, the stock was going to have a negative outsized reaction. Now, the second piece is what you're seeing in the sell-side analysts and reviews of the quarter is that the guidance seems conservative and there's probably ability to beat numbers throughout the year. And the reason the analysts are saying this is because of the very muted change in the midpoint for the full year guidance. So again, what are the key things to remember about this situation? The guidance midpoint is a small relative change in the first quarter, or in the full year, a little larger in the first quarter. And essentially with price target multiples between 27 times and 37 times out year EV to adjusted EBITDA, you're going to see a large reaction in the stock price because of what seems to be an outsized change in the midpoint in the first quarter of 26. And so lastly, because Doximity trades at a valuation extreme, as we can see in terms of the sell-side analyst price targets, you're going to have a large change in stock price relative to these somewhat minor moves in your guidance midpoint. So let's get into the key learnings. And the idea is guidance, again, is your long-term valuation tool if you're a public company. Number two, the midpoint relative to consensus is the most important data point coming from your earnings process. Number three, you have to remember, how does your midpoint change relative to the consensus midpoint? That's what's going to drive the upside or downside in your stock. And then finally, what is the change in my guidance midpoint relative to my stock's valuation? Is the stock at a premium or is it a valuation low? And that's going to also determine the magnitude of the reaction in stock price. Thanks for watching.